Hello, this is Steve Coker, president of Cedarstone Advisors, and this is the May edition of Cedarstone Economic Insights. Over the next few minutes, I would like to discuss gold, one of the more popular investments over the past few years. Well, gold sellers have been working overtime over the past few years, and many of these firms are selling through fear of some impending collapse in the financial markets and use gold as some type of perfect investment to quote-unquote protect your wealth. The story that was widely told was that with the expansion of money supply in the United States, driven by the Federal Reserve's unprecedented quantitative easing, the inevitable result would be a collapse of the US dollar. Therefore, the only way to protect yourself was in gold. And until 2011, gold did trend higher as investors sought this safe haven. However, the actual result over the last 4 years was very different from these initial forecasts. In fact, the dollar is actually higher than it was in March of 2009 when the Federal Reserve announced its controversial quantitative easing. Gold, meanwhile, while it did surge until 2011, has fallen more than 30% off of its highs. How perceptions change. The US dollar is surging, gold is sliding, and the Federal Reserve is winding down its stimulus. What happened? Well, in short, the pundits were wrong. Inflation has not raged out of control and continues to be very low, and the U.S. economy has recovered and become a magnet for foreign dollars. If we look at the long-term charts for gold, it has been a very poor long-term investment. Gold is a store of value, but it's lifeless. It doesn't generate any income. It doesn't bring in any cash. Over the past 40 years, it has been far better to invest in stocks or bonds. So much for protecting themselves. Those who invested in gold over the past 40 years could have ruined their retirement. And I think these last 5 years have been an excellent example of how companies can change, adapt, and reinvent themselves to make money. As the economy has recovered, those who maintain a diversified portfolio have actually been far better off than those who listened to the fear sellers on the internet to protect themselves with gold. There are a few core lessons for investing here. First, beware of fear sellers on the internet. I would say invest on facts, not fear. Secondly, be wary of popular investments. A good rule of thumb is if they're advertising on TV, be wary. And lastly, the best protection is to stay diversified rather than just piling into what's popular. If you'd like to talk about your investment portfolio, please feel free to give us a call. We'd be happy to share our thoughts. Thanks so much.